In just a few years, Nvidia went from a niche graphics card company to a $5 trillion tech giant. Since the AI craze exploded with tools like ChatGPT in 2022, Nvidia's stock has climbed about 12 times over. That means a $100 investment in late 2022 would be worth roughly $1,200 today. Reuters reported Nvidia made history as the first company to reach a $5 trillion market cap, fueled by an investor frenzy around artificial intelligence. CEO Jensen Huang has become a Silicon Valley icon almost overnight. Under his leadership, Nvidia's advanced AI chips, like the H100 and upcoming Blackwell GPUs, now power popular AI systems such as ChatGPT and Elon Musk's xAI. What's driving this surge? In simple terms, AI chips. Companies building AI tools need huge computing power to train and run models. Nvidia makes the graphics chips, GPUs, at the center of that. Their latest processors are so valuable that customers are placing hundreds of billions in orders. In one recent announcement, Huang said Nvidia had about $500 billion in AI chip orders in the pipeline, including deals to build supercomputers for the U.S. government. Even politics has caught wind. President Donald Trump is expected to discuss Nvidia's new Blackwell chip with China's leader, Xi Jinping. The high-end chips are caught up in trade talks and export controls. All these factors, from booming AI demand to global attention, have made Nvidia a must-watch stock. Its rally has cemented its place at the center of the global AI boom, according to Reuters. And this is just the beginning. What exactly makes Nvidia's chips so special? The answer lies in how artificial intelligence is changing computing. Training large AI models like GPT-4 requires massive data crunching, and GPUs can perform those calculations much faster than ordinary CPUs. Nvidia's AI chips are like the engines that power modern AI. In fact, Nvidia's chief financial officer, Colette Kress, said on a recent earnings call that demand for AI infrastructure continues to exceed our expectations. With the company's 3 chip generations, Ampere, Hopper, and Blackwell, running at full tilt. This demand shows up in the numbers. Nvidia's data center sales have skyrocketed. A recent analysis noted that Nvidia's data center revenue was $18.4 billion in Q3 2023, a 279% jump from the year before. That's staggering growth. Cloud companies and AI startups are competing to buy Nvidia GPUs. Nvidia now expects AI spending to grow 40% per year into 2030, reaching $3 to $4 trillion worldwide. Such projections have pushed analysts to hike Nvidia's profit estimates and justify the stock's lofty price. Even after running up so fast, Nvidia is trading at around 24 times forward earnings, which some experts say is still lower than the overall tech index. To put it simply, every big new AI project needs Nvidia chips. That dependency helped Nvidia shares grow roughly 1,000% over the last 3 years. But Nvidia doesn't have all the AI chips in the world to sell. Its products often sell out. The company can barely meet orders. Data from IDC, a research firm, shows that the AI boom has been so powerful that every dollar spent on AI tends to generate about $4.90 in economic output, a huge payoff that is only fueling more demand for chips. In short, Nvidia's chips are at the heart of today's AI revolution. Cutting-edge processors like the H100 and the upcoming Blackwell have become the engines behind popular AI programs such as ChatGPT and Elon Musk's xAI. This dominance has made Nvidia the leader in AI hardware. According to market research, Nvidia controls roughly 80% of the AI accelerator market, far more than any rival. That means if you want to train a top AI model right now, chances are you're using Nvidia. But Nvidia isn't alone in this race. Its 2 biggest chip rivals, AMD and Intel are scrambling to catch up, as we'll explore next. Nvidia has a huge lead, but competitors have answers too. The second biggest AI chip maker is AMD, led by CEO Lisa Su. AMD's new Instinct series GPUs like the MI300 are aimed at large AI workloads. They haven't matched Nvidia's volume yet, but they made a splash. Last year, AMD reported more than $5 billion in revenue from its Instinct accelerator chips. That's nearly a doubling of its data center business. AMD's data center sales grew 94% in 2024. AMD also continues to sell its popular EPY CPUs alongside GPUs. This growth shows AMD is nibbling at the AI market. Some big companies, like IBM, have announced partnerships to deploy AMD's chips for generative AI on their cloud services. Still, AMD's market share remains far behind Nvidia's. Its chips are not yet as widely adopted for the most demanding AI training. Analysts say AMD's Instinct GPUs will get faster and cheaper, which might lower AI hardware costs. But for now, Nvidia's toolkit, including its software platform CUDA, remains the gold standard. Intel is the third player. Under CEO Pat Gelsinger, Intel has poured resources into AI accelerators like its Gaudi line. However, Intel has struggled. Just a year ago, Intel expected to sell over $500 million worth of Gaudi AI chips in 2024. That forecast was quietly canceled. In a November 2024 update, Intel admitted it won't even make $500 million in Gaudi sales this year. In fact, Intel's stock fell about 50% over the year as it fell behind in the AI race. Gelsinger blames software delays and manufacturing issues, but investors see Intel missing out on the AI boom while Nvidia runs ahead. No other company comes close. Some cloud giants are also designing their own AI chips, like Google's TPUs or Amazon's chips, but none have publicly threatened Nvidia's lead in GPUs. Even as rivals like AMD and well-funded startups work to challenge Nvidia, industry experts still say Nvidia is the industry's top choice for high-end AI processors. As these chipmakers battle, Nvidia's own stock has led the pack of tech giants. In October 2025, Nvidia alone reached a $5 trillion valuation, milestones that even Apple and Microsoft haven't all hit. The rally has been so dramatic that it has left the rest of the Magnificent Seven far behind, according to analysts. Clearly, everyone is betting that Nvidia's hold on AI chips will last for years. With Nvidia's stock roaring ahead, many investors are asking, how long can this continue? Some worry it's becoming a bubble. Nvidia's price ratios are higher than almost any company in history, yet insiders argue the fundamentals are still strong. The CEO announced huge new orders, $500 billion, and even White House politicians are talking about these chips. Jensen Huang has walked a careful line, praising U.S. tech investment and warning against cutting off China from Nvidia's products. Valuation aside, the key question is whether Nvidia can keep selling tons of chips. Right now, cloud providers are racing to build AI data centers. Nvidia predicts that by the end of the decade, the world will spend around $3 to $4 trillion on AI infrastructure. If even a fraction of that comes through Nvidia's doors, the company might have years of growth ahead. Of course, risks remain. Any new technology hype can fade. If chip production can't keep up, or if a new architecture, maybe a startup or a government-backed effort, suddenly outperforms, Nvidia could see slower demand. For now, though, Nvidia's chips are still in sky-high demand and its rivals are not catching up fast enough. Its stock's eye-popping run reflects that rare combination of massive growth and market dominance. In the end, Nvidia's AI chips are the story of the moment. A gamer chip company turned the AI boom into a stock rally that has captured the world's attention. The question now is it sustainable? Investors and tech fans are glued to the news for answers. What do you think? Are Nvidia's AI chips worth the hype? Or is the stock due for a reality check? Let us know in the comments below.